Today, I want to talk about how lots more banks are about to collapse. Wall Street is now saying they won't be cutting rates 5 or 6 times this year. In fact, they won't even be cutting rates at all and may even raise them. Most regional banks are about to collapse. So stay tuned and let's make some money. Also, today is the best time to join the Millionaire Mindset Trading Group as it's the first of the month. And be sure to remember that 100% guaranteed refund policy if the educational videos and trade ideas don't help you make a singular profitable trade within 30 days. But now I'll dive straight in with the key information. So, Barchart has tweeted saying the Federal Reserve will not cut rates this year, warns Apollo Management. So it says Apollo's Torsten Slok says the Fed will not cut rates in 2024. It says the chief economist flags the surge in US growth and sticky inflation. Slok has said the Fed will spend most of 2024 still fighting inflation, which is again steadily on the rise. Obviously, we know to fight rising inflation, interest rates must not be decreased, but increased further. If inflation is still sticky, it's not decreasing further and it's starting to increase, that means rates still have to go up. As Bigham's added, he said, like I said, watch them not cut the rates, but raise rates instead. Now, by now, we know these high interest rates have got these banks stressed. It's destroyed the entire commercial real estate sector, which has destroyed commercial real estate loans. Because tons of these loans are going to default because the properties themselves aren't worth nearly as much and the loans now can't be refinanced, it means these banks are going to start taking massive losses. Many thought these rates were going to be cut this year to potentially save these regional banks, but instead it looks like the rates will not be cut but will now increase further. On top of that, you'll also remember I've touched on the Bank Term Funding Program, which increased dramatically in March of 2023, obviously due to the banking failures, but actually still continued to increase all year through 2023 and through 2024 as well. The BTFP peaked at $167 billion, and this Bank Term Funding Program is now just about to be cut. The Fed have decided this bank term funding program needs to be finished and the banks that desperately borrowed money under this facility must repay every single penny. But obviously with rates continuing to stay where they are and potentially increase further, these banks don't have the cash needed to repay the loans and will eventually end up collapsing. As I said, many if not most regional banks will be collapsing this year in 2024. But as Finance Lancelot has tweeted, he said the Fed want regional bank failures and to consolidate the banking system, which is why they're ending the Bank Term Funding Program and will likely increase rates further. He said the whole point of intervening with the Bank Term Funding Program and OCE in the first place was so the Fed could control when the collapse happens, just like in 2020 and just like in 2008. Maybe in March of 2023 they weren't quite ready for all of the regional banks to collapse and believed the panic would be so massive and so severe. But maybe now in 2024, now they have some new regulations in place, now they've tried to decrease the panic in the banking system, they're happy for these regional banks to collapse. Now, the White House is saying the banking system remains sound and resilient, but as Finance Lancelot points out, he said, now, where have I heard that exact same sentence before? Of course, this is what the White House and the Fed were saying back in 2008 and the year 2000, just before both collapses. Maybe the Fed does believe they have a hold on the banking system and that regional bank failures can be managed and consolidated, but maybe they don't have a hold on the system and all chaos is about to break out. Today we took a slightly smaller trade in the Millionaire Mindset Trading Group on MINM for a cool 26%, where CSIMs profited $200. But what I thought was brilliant today was this message from Green Trader, who's just had another green day. This entire week he's been green every single day and he's increased his entire account by 24% this week alone. Green Trader has really been following the Millionaire Mindset Trading Group rules, compounding his small gains every single day, which end up adding into big gains. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below. Now, as a side note, what's really interesting is two mainstream media outlets have been caught posting massive, incorrect lies against AMC and their earnings. Bloomberg today posted saying AMC, the world's largest theatre chain, reported fourth quarter earnings that fell short of Wall Street estimates. But obviously, as the community notes have came through, it says this is not true because AMC beat the estimates. Again, it seems even Bloomberg is joining the motley fool, desperately trying to post FUD against AMC to scare retail investors into selling shares. And again, another article saying AMC Theatres has cut the CEO's target pay by 25% after a dismal 2023. Again, I'm not sure a year where the box office is up 20% year on year and where AMC's revenue is up 20% as well. Their adjusted EBITDA is up massively, up 9 times, and is massively positive, could ever be considered a dismal year. Especially not when AMC has actually beat earnings 11 times in a row. But of course, analysts and the mainstream media are paid by hedge funds trying to desperately convince you that this is not good. Again, I don't know how a company beating earnings 11 times in a row could ever be considered not successful or not good. Especially when that company is in an industry where the box office figures have been increasing by 112%, 64% and 20% year over year. As the French AMC ape tweeted, he said, "It sounds like to me someone took a big bet the wrong direction and wants their money back." As Joshua added, he said, "Imagine being in such big trouble that your fund shorts a stock that's currently trading at 50 cents per share pre-reverse split value." He said, "Your fund has to be in liquidation or bankruptcy trouble to short a stock when it's at an all-time low, when it's at its all-time low at this low price." Furthermore, not one of these hedge funds has ever realized a gain. And this is actually something I found very, very interesting. You remember there was tons of articles back in 2021 and 2022 and 2023 about all of the hedge funds down 80, 90, 100% and going bankrupt as a result of shorting meme stocks. We all remember the headlines of Melvin Capital and many other hedge funds losing $3, $4, $5 billion and even more as a result of shorting AMC and GameStop. But I've never seen one singular article about a single hedge fund that ever profited from their short positions. Never have I seen an article saying, "This hedge fund profits $3 billion from shorting AMC and has locked in their gains." The reason why we haven't seen these articles is because not one hedge fund has realized this gain. And that's because these hedge funds and these shorts are trapped, they're stuck, and it's impossible for them to realize those gains and buy those shares back without setting off a mother of all short squeezes. Obviously, these hedge funds have never realized this gain. They're desperately hoping AMC goes bankrupt so they don't have to buy the shares back. But AMC is not going bankrupt, and at some point, they will be forced to buy back in. As I said, a company in a growing industry growing at 112%, 64% and 20% year over year is not going bankrupt. Actually, just by looking at these numbers, I'm not even sure some sectors like the AI and EV sectors have CAGRs or compound annual growth rates this big. From just a quick look, it seems the compound annual growth rate of the EV sector is expected to be 23% over the next few years. So actually, AMC in the box office is growing faster than the entire EV sector. And again, the AI sector has a compound annual growth rate of just 15%. So actually, AMC is growing faster than AI companies, and yet these shorts are still trying to short it. That to me sounds like a terrible business model, a business model that's likely going to end up with many of these hedge funds going bankrupt from taking risky and wrong short bets. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.